What is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Happy Tuesday to you all. Chad P, welcome in, man. Patrick Schooner, Steel and Stone, thank you guys for being here. Time Attack, much love to you as always. Thank you so much for modding. Thank you so much for posting the Telegram channel in the chat. Guys, if you are interested in the Telegram, all you have to do is join BYDFI using my affiliate link and deposit the minimum deposit of $100 or more. After you do that, click the Telegram link, type in /verify in your user ID, and that'll get you into the Telegram. And I can go into that more in detail later. Wander5813, welcome in, man. Thank you so much for being here. Yes, please, guys, hit the like button if you get any sort of insight into the live, into the price action from this live stream. Thank you for posting the NAMI link as well. Teal House Coffee and Bakery, hello again, man. It's good to see you. Yeshwant, love to you back. Thank you for tuning in from India. Sudeep, much love to you as always. Dad87, thank you so much for being here. Thank you for your support and kindness as always. Warthog Thunderbolt, up or down, man. You know, right now we're really rangy and we're at an important resistance, right? We knew this 78K resistance was going to be an important resistance where we could have expected a pullback. Now, I would say this. So far, overall, if we zoom out to like the 4-hour time frame, we're still in a bullish market structure. So we have to say until we, higher highs, higher lows, higher highs, higher lows in here. So we have to at least give the mid time frame priority that to new highs could be coming. We could still make new highs, even if it's just a double top of Friday's highs. What is a bit muddy here is from the move down here, there is a way to count this as an impulse, but there's you kind of have to force your wave 2 in here, right? A 1, 2, 3, 4, 5. It's kind of hard to do that. But if we're looking at this, not trying to force it, it does look like a 3-wave corrective move. Also, we ended our high on a 3-wave corrective move. So you generally want to end an impulse with a smaller time frame impulse, and we don't have that there. So there is the possibility we could make new highs. But at the same time, we could see a larger corrective move down before coming back up as well. And so it's just, so the reason why the title of the stream is prepare for both scenarios. Here's what to do, because as a trader, especially like at times like this, we don't know whether this impulse is completely finished yet and we're going to see a big crash to the downside, or if we're going to continue to range for a bit and then continue to make new highs locally. And as traders, we don't have to know. We just have to know the areas of interest to be prepared to enter trades, and we have to look for what confirmations do we want to see in order to enter those trades. And I got a comment yesterday on my video. You said it could go up, you said it could go down, total BS, blah, 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 blah. Well, guys, as a trader, we don't really care whether it's going to go up or down. We care about finding the trades that are probable to play out. So, like, for instance, here, we were looking for a short position because we know that it was a big resistance. We knew if we had confirmation, we would enter the short position. At the same time, within this larger range, as we were coming down to these lows down here, we had a lot of support down here. We were looking for longs down here, even knowing that this could break down to take the 60K lows. We still knew that this was a significant support level where we could get a big bounce. And so for me, it's not really about, is it going to go up? Is it going to go down? It's about marking out the levels of interest. And if you have confirmation to take a trade, even if you think it's against your bias, my bias here actually was that this was a larger 3-wave corrective move and we were going to dump to 58K. We didn't. We held the value area low. But even though my larger bias was that we were going to dump down there, I was still looking for longs here because it was a good support level, even if it was just going to be a scalp long before ultimately rolling over again. And same thing in the area that we're at now. Obviously, we got into the short. A lot of us in the community got into the short in the $78,400 to $78,000, and I'm still in that short. I've added to it. My average entry now is around 77,350-ish, and I'm looking for this potentially to break down big, to come down big. But at the same time, I am still looking for local scalp long positions, and I'm even looking for local scalp shorts, as I took earlier today and posted in the Telegram earlier today. I'm in a local, very, very local scalp short right now. Entered it, I think, gosh, like an hour, 2 hours ago. just based off of some local price action, we were losing that value area high and rejecting from that anchored VWAP. So I'm in this short here. I did take out 25% once we started to break above these prior highs. I took out 25% just to cover fees if I do get stopped out here. But it's really about not knowing whether it's going to go up or down. It's about finding those opportunities to scrape a little bit of money from the market and just to slowly build your portfolio. So no matter what's going to happen, you're prepared, you have a plan, and you can execute on that plan. But I have to say, we're at significant resistance. We did reject with some bearish divergences up at the 78K level of resistance. And yes, it could be done, guys, in the larger ABC corrective move that we've been looking at of a contracting diagonal here in a wave one. You have your 3-wave move in a wave 2, and then you could have a double 1-2 or triple 1-2 impulse in this ABC. The C wave, the most common scenario is to take out your A wave highs. We've done that. Also, the minimum target is to hit the 618. If you pull a trend-based Fibonacci extinction from the lows of A to the highs of A to the lows of B, the most common target is between the 1-to-1 and the 1.236, but your minimum target is that 0.618 Fibonacci extinction, and we've hit that. So technically the high could be in, and we could be about to really roll over here. We're not really seeing a harsh rejection yet, guys. And if we are going to see a harsh rejection, we really want to see this play out with a wave 1, wave 2, and we want to see that significant dump coming in relatively soon here, where we do start the move down with an impulse, and this could be the wave 1 of a much larger 5-wave impulse down to 58K. You know, something like 1, 2, 3, 4, and then come down to 58K or so. But we don't have clarity yet. We need a little bit more data to develop on the charts. We need to see locally what's happening locally inside of this price action, inside of this range that has been developing for about the past 8 days now. It's since last Monday, we've been forming this sideways range, hitting into resistance at the highs of that range. I'm prepared here for us to dump. I'm also prepared at the same time for us to continue coming higher to actually hit that 1-to-1 Fibonacci trend-based Fibonacci extinction, which I do still think we can get up there. If you guys remember yesterday's thumbnail, I do still think we could get up here because this is a bit muddy in here. The move down that happened over the weekend is a bit muddy. Now, one of the things that we need to pay attention to is the low that was made, this low inside here at around 73.7 was a weekend low. This happened on a Sunday. And we do know that weekend lows and weekend highs often get taken out sooner rather than later. So even in a bullish scenario, now for the biggest bullish scenario, we do not want to break these lows of the range again. It would be an official bearish break in market structure. If we do take out like a 4-hour break in market structure, if we take out pretty much $73,300, I will start to get a little bit more bearish. But could we also see a ABC coming down to that important anchored VWAP, and it's also your previous range value area high? Could we come down to this area, see a bounce, and still make one more high before maybe seeing some sort of larger flat range that forms in here before ultimately seeing that big dump to the downside? So that is also a possibility. Do I know which one is going to play out? No, I don't, guys. I will be honest with you. I do not know which one is going to play out. But what I do know is I will be prepared at this area for a potential bounce. If we have confirmations, I will enter a scalp long that could turn into something bigger. And if we come down there and we don't have proper confirmations, then I am already short from higher, and I'll be looking for that possible bigger impulse to the downside and dump to the downside. So it's really about finding those opportunities in the market, finding those key levels of confluence, and being ready to trade when you get there. Okay, let's see. Ryan Henson, welcome in, man. Good afternoon to you as well. Chili Naminero, what's up, man? On long right now from the value area low, the local low too high. Okay, confluence with last weekly VWAP. Okay, so you're in a local scalp long from this value area low. Well, that was a good trade. That was a good low that was made on Sunday, and we did have local bull divs as we were coming into that. You can see, and I actually talked about this in yesterday's video. Lower lows on the price action, higher lows on the momentum waves, and even NAMI was showing it a little bit in there. So nice little scalp long opportunity. Now, once we started to lose this value area high, I probably would have taken some profit out. I'm not a financial advisor. I don't give financial advice, but that is how I would trade this. If we're just playing this range of the last week, if you bounce from value area high, you could maybe expect a rotation. If you bounce from value area low, you might be able to expect that rotation up to value area high. If you start to see a fake out of value area high and fall back inside the range, then maybe this is going to all of a sudden roll back down and take out those weekend lows or even the range lows. So in that scenario, I would have at least taken some profit near that value area high, or as soon as you started losing that value area high. As far as the local trades, guys, the reason why I entered short in this area today is because we're falling back inside the volume profile. And if we look at this, we could count this either as a 5-wave impulse or a 3-wave corrective move. Personally, I think it looks better as a 3-wave corrective move. I have seen some other traders that are looking at this little area in here being a running flat, a 1, 2, 3, 4, 5. So if you start the move down with an impulse, you're looking for a 3-wave corrective move up before seeing another 1, 2, 3, 4, 5 down. And that could be your larger ABC coming down to this area of support. And because that is a valid possibility, that's why I'm paying attention to both scenarios. That's why I have this support level marked out on the charts. Also, if we look at our naked daily points of control, we do have a naked daily point of control that is right on top of that 1-to-1 Fibonacci, trend-based Fibonacci extinction. So absolutely, we could come down to that 74,300, 74,000, 350 to 250-ish area. Excuse me, 72,250 to 72,350. At the same time, are we just going to continue to range within this range? And we do know that when you hit into a resistance, it's like a piece of paper. Imagine this purple box is a piece of paper. The more times you hit into it, you're poking holes in it. It's getting weaker and weaker and weaker. So if we can continue to consolidate in a range here and continue to bump our head up against this resistance, eventually it's going to break and you're going to break through it. It's like a piece of paper that's getting weaker and weaker. Finally, you're going to bust through it. So consolidation below resistance is actually somewhat of a bullish thing. All right. Archie, TV Live, welcome in, man. Can you turn up your mic? Yes. Is it low, guys? Let me know. How does the mic sound? Check, 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 check. It should be turned up a little bit more now. Check, check, check. All right, let's do this. There we go. It should be pretty good now. I'm almost, as far as my sound mixer, I'm starting to spike into the yellow and rarely into the red there. So let me know if that's working for you guys. R Pink, much love to you, man. Best mod in the world. Thank you so much for being here. Thank you for all you do for the live streams and for this community. Little Rick 69, welcome in as well. And Pele Photography, welcome in as well. Good. Okay. Thank you, guys. Thank you. Thank you. So breaking out from the level is bearish. Well, a bearish thing for me would be to break this $73,300 level, right? Because if we're looking at now, when we're paying attention to what the overall trend is going to be, market structure is king. And if we're looking at this market structure, and let me just zoom out because the 4 hour shows the market structure very clearly. From our 65K lows, you can very, very clearly see we are making higher highs and higher lows within this entire move up. Higher highs and higher lows. And so our last significant higher low was this low here from last Thursday. Right? This guy right here. And so if we're in a trend of making higher highs and higher lows, and now all of a sudden you top out into a key resistance, and then you start to see a break, a lower low, then you could say, whoa, this whole entire structure has been an uptrend. Now are we going to see, first off, we saw a lower high first, and then if we break it down a lower low, could it be another lower high before ultimately breaking this thing down aggressively? And this is where those double 1-2 and triple 1-2 impulses could come into play. So in the bullish scenario, we could see something like a flat where we still break that low, bounce from a local support, and instantly reclaim and get back inside this volume profile. If we do that, I would say there's a chance this could be bullish, and we want to pay attention to this move up, whether it looks slow, grindy, corrective, or whether it looks impulsive with increasing volume. Now, if we are going to see that bearish break in market structure and we continue to see something like this, but we're grinding up in this area very slowly, very crappily, then you could say, hey, this is looking more corrective. Is this going to be a 1-2, 1-2 before ultimately breaking down in that 3? And then you could see some 4-5s coming in to take out your 65K lows. And really even coming down to take out your 60K lows. We don't know. We don't have enough data yet. And right now we're just ranging within this range. So all we can do is pay attention to this range for now. We can scalp within this range. That's why earlier today I did scalp once we fell back inside of the range. You can see over the weekend, first of all, or not over the weekend, on Monday, saw a small little break out of the range, kind of fell back inside for a bit. We created that one last high, which does give us a nice little 3-wave move in here. And then if this is going to be, we want to see if this is going to break down, we want to see this being impulsive. And if we zoom in on the lower time frames here, so far it's a bit choppy, but one thing that I did see that was a bearish signal for me was we fell back inside the volume profile and we lost the VWAP for the day. You can see throughout Monday, pretty much the VWAP was acting as support through most of Monday. Today we're losing VWAP, and on the lower time frames, VWAP has been acting as resistance. Resistance, we on the 1 hour chart, this is just a wick above VWAP. So resistance, resistance, and now we're falling back inside of our volume profile. So that is why I attempted the scalp short here. And really, I was just looking to come down. We have this liquidity resting here, and we have a 786 in our POC of the range here, because as far as volume profile trading goes, if you're trying to break out of the range, you see a bit of a failed auction above the breakout of that range, and then you fall back inside of it, oftentimes you'll work your way to the POC. So that's why this scalp, really, I would take 75% out around the POC. Now you can see my short trigger is, my short TP is a little bit before that POC, and it's just because we have our local 786 there. If I pull this Fibonacci retracement, our 786 is going to be coming down very close to that POC. So I guess this zone right in here between the 786 and the POC would be a local TP for me. All right. Okay, thank you guys for letting me know the sound is good. I appreciate it. And Time Attack, I appreciate you so much as well. So thank you for all you do as well. Falco's Forge, welcome in, man. Yeah, I don't get stuck looking to the right so much. Yeah, don't get stuck looking to the right so much. You don't look left. Yeah. The thing is, past price action will give us an indication on what could happen in the future. And especially if you're looking at these, you know, pitchforks and channels, like these trend indicators. Let me go ahead and hide some of this stuff here on the chart. These trend indicators will give you somewhat of a bias. You know, like if we have a bullish pitchfork, and for instance, for the last couple of months, we've had a local bullish pitchfork. And so, yeah, we can look at, you know, this past price action to understand if it's been respected highly in the past, then there is the chance that it can be respected in the future as well. So in that sense, I will look back sometimes, but we're really trying to figure out, yeah, and you are looking at past price action. You're looking at support levels, resistance levels, volume levels, liquidity levels, right? Liquidity is a big one. Now, we have liquidity from a weakened low sitting down here. Are we going to at least come down to take out that liquidity? And if we do, I would suspect that we're going to take out the last Thursday's lows as well. Take out the lows of the range. But that's kind of the things we look for as traders, guys. Let me just hide this little short position for now. Let's hide this 786 for now. Much better. Okay, thank you, guys. Thank you. All right. Is it still low though? Teal House Coffee and Bakery, is it still coming in a little bit low for you guys? Let me see if I can just adjust this mic angle. Jojo, welcome in, man. Thank you for being here. Now, another thing we're looking at here, guys. So anytime you have an important range high or range low, zooming out on the daily time frame, this is our range that we've been in for 2.5 months. 78K is now our new range high. So we can pull an anchored VWAP from that high, because that anchored VWAP is going to give you kind of a trend, right? And if we're going to remain in a bearish trend, you generally want to reject from that anchored VWAP. We have been seeing some chop around it for the past 24 hours, but today was another thing that happened is we lost that anchored VWAP. We back tested that anchored VWAP because we rejected. We made new local lows. And you can see the anchored VWAP is currently right where the daily VWAP is. So if we do come up there again and reject it again, we might be able to see that bigger push to the downside. And coming in onto the very low time frames, if we go like to the 5-minute chart here, in the bearish scenario, we're looking at a bunch of 1-2s because there's a lot of overlap in this here, this price action. So we would have to say like 1, 2, 1, 2, 1, 2, and then you could see that big 3, and then you could see your 4 5s coming in to take out your range lows around 73.3. Actually, you would probably want to see this extend down to that 1-to-1 trend-based Fibonacci extinction. So that's what we need to look for locally. Some stacked 1-2s in here. You get your big third wave flush, and then you start to get that selling exhaustion towards your resistance or towards your support level here. Now, on the other hand, if we do, because this is really choppy, really low volume chop here, if we do start to break out of it and start to break market structure bullishly by breaking this lower high rate here, then we could say, hey, there's a chance that we are going to come take out the highs locally. And that's when we can look for scalps locally there. We can actually throw even a little channel on this thing. Kind of that's your channel. You have one little deviation of the channel from earlier today. Breaking above the midline right now. And depending on if we break market structure, which you can see that market structure break is going to be near the highs of the channel. So very locally for scalp trades, we can look at maybe getting into some scalp trades today. You want to break 76.205. And if you break 76.205, that is going to somewhat invalidate those multiple 1-2, 1-2, 1-2, 1-2, 3, and then you get your 4 5s coming in down here. If we break that, then we're pretty much going to invalidate that scenario of all those stacked 1-2s in there. And then we could start to look for coming to take out the highs of the channel, because you would also be breaking out of the highs of the channel. And then in that scenario, we would look to come up a little bit higher. I am a little bit, for me, guys, this move up happened overnight. This move up in here happened overnight. So I didn't get to catch any of this, and I didn't end up shorting the new highs. I added to my short yesterday at the golden pocket, my short from 78K, added to it at the golden pocket there. And I'm still in that short, but this happened overnight for me, and I wanted to see us come up a little bit higher because we do have a CME gap. If we go onto our CME chart, go ahead and grab that here. Our CME chart, you can see that gap. It gets filled around $77,100, and we didn't quite fill that gap all the way. And then if we look at our daily levels, let me go back to our Coinbase chart. And if we look at our daily levels, we have a fresh daily level at pretty much 77.1 as well. So coming up to about $77,100, we have a fresh daily level. Now, the other scenario that I did post about in the Telegram, we could be looking at a flat that's been developing. What did I just do? All right, there we go. I'm just going to hide this small channel. We'll hide this for a second. The one thing that we could be looking at as well, because what we're looking for, if this was impulsive to the downside. Now, I struggle to count an impulse in here, but yes, there technically is a valid count in this move down from 78K to 73.8, 73.7. But if we're looking for a lower high, oftentimes that lower high ends between the golden pocket and the 786 Fibonacci. So let's go ahead and throw that on the chart right now. Going from those 78K highs down to the weekend lows. We'll throw on both of them. And you can see where was yesterday's rejection at the golden pocket. Now, we have not come up to the 786 yet. So we're technically in the zone. You can see right now kind of rejecting from our golden pocket area, which is a common lower high target to reject from. If this was an impulse in a wave 1, and we're going to see a wave 2, and then see that big third wave come down, and you would want to really start to break a lot past the 1-to-1 to the 1.236. You would want to come a lot lower. You would actually want to come down to your 1.618 or even further than that. In that scenario, it would be sub 70K, taking out those 70K range lows, which we do know we have a lot of liquidity resting down there. Now, let me turn off these dailies real quick. Now, we're looking in the lower high. So if this was an impulse here, we're looking for a 3-wave move to make a lower high before ultimately breaking down and making a lower low. So could we say this was it? 3-wave move here, rejecting from golden pocket. Now we're stacking some 1-2s and we're about to fall. Yes, we could. But there's also a different scenario here where you have this kind of push up in an A wave. You have a flat here in a B wave, and then you could see one more push up to that, 77.1 to about 77.4 in a C wave, and then you could roll over. So yes, there is a valid opportunity to see us come, and in that scenario, you would be taking out those highs. So zooming back into that channel that I just showed you on the 5-minute time frame, that is where we can say if we start to break market structure bullishly, we can look for scalp trades to take out these highs here. And, and then we'd be looking still, the highest probability we could still make a lower high if this is going to be that A, B flat, and then a C. We could still make a lower high below our 78K highs and then still see a big aggressive dump come in. On the larger time frames, I did discuss in yesterday's video. On the larger time frames, the daily money flow is still not looking that bearish, and we do not have daily bear divs. Generally, if this was going to be a macro range high in a 3-month long range, 2.5, 3-month long range of this entire range here, we would want to see some bear divs on the daily time frame, and that would be between our 76K highs and our 78K highs. And we're not really seeing those bear divs on the chart. You could see on Market Cipher B, we have pretty much an equal double top here, but money flow looks good. Even if we did have bear divs and the money flow looked good, we would give priority to the money flow. And on NAMI, we don't have local bear divs. We don't have money flow bear divs here. So I do think that on the daily time frame, we still could continue up to that really key $82,000 to $87,000. And if we're looking at, just a refresher, guys, and I know we covered this a lot last week. Let me just hide that. That larger ABC correction here, could it be done at the 78K highs? Yes, but I would preferably like to come a little bit higher. And if we're looking at that trend-based Fibonacci extinction, you've hit the minimum target of the 618. But the most common targets are to come up to the 1-to-1 and that 1.236 Fibonacci extinction. And very, very nice. Both levels have very nice confluence. So let me go ahead and, while we're here on this smaller pitchfork, you can see that it would be the upper band of our smaller pitchfork, right in that zone. Now, if we turn on our larger bearish pitchfork, you can see that the midline of that bearish pitchfork is also right on top of that 1-to-1 trend-based Fibonacci extinction. So there is a lot of nice support or resistance, confluence of resistance in this area around $82,300. And then if we get up to the 1.236, which is another common target, it's really the zone between the 1-to-1 and the 1.236. You can see that 1.236 is coming in around $87,000, which would be the high of this smaller bullish pitchfork. And it would also be our value area low of our upper range, our 2025 range. So it would be this range in here. And if we look at this entire range of 2025, it is pretty much 86,000 is really where that value area low is. So let me go ahead and throw that on the chart. That is our, did I delete it? Okay, let me go ahead and grab it. You can see that value area low is going to be coming in pretty much at $86,000, 85, 880, depending on where you pull this to, 85, $86,000. So, that next zone is also going to be important because our C wave could extend up to this area. And we do know this is going to be a very important area because as far as market auction theory goes and volume profile trading, we've been trading for the past couple months inside of our fair value for 2024's fair value. If we start to break out of this range, then you generally will come back up to the 2025 fair value in this case, and you'll retest what used to be acting as support now as resistance. And if you reject there, you expect to roll over and take out those lows. In this case, it's $60,000. All right, let me check the chat here. Where was I? Okay. 1 hour market cipher B wave is looking juicy. Let's see here. 1 hour. Well, we did have some bear divs on the 1 hour actually on market cipher B. So let me get rid of this. And you can see here, as we made that new high last night for me, at least where I'm at in the world, we have the higher highs on the price action. We have lower highs on the momentum waves, confirming some bear divs. Your money flow is still looking pretty bullish here. So one drive of bear divs might not be enough. And then on NAMI, we had more of equal highs in here rather than bear divs. And even locally on NAMI, you have potential for bull divs as we're making these little lows in here. It looks like as we were discussing this, we came up to VWAP again, and we're rejecting VWAP again. That VWAP also happens to be where your micro range value area high is. You can see that little 1 week long range value area high, VWAP. And the reason I took the short from here, guys, is because we're starting to get stuck under VWAP. We tried to break out of it. All in here, we were trying to break out of that VWAP, and we rejected from our golden pocket. And now if we fall back inside of the VWAP, this could get aggressive to the downside. So far, it's not. So far, we're just seeing some chop in here. But if we're going to see these as 1-2s, you want to see that big third wave starting to come in soon here. And I wouldn't want, I have seen 3, 4, 1-2 stacked in a row before, but you really don't want to start continuing to chop like in, 4 or 5 1-2s in here. It just wouldn't seem likely for me. In that case, this would be, a descending channel, corrective descending channel before ultimately breaking up. I've been struggling with psychology every time I try to scale up. 3 weeks ago, I scaled back position size to the point where it was insulting, and the past 3 weeks of trading have been phenomenal. Well, here's the thing, Andrew. I understand your predicament completely, and it's about learning the process, right? So I understand if you scale back so much that you feel like you're doing a whole lot of work for nothing, and it's almost like an insult to you to be trading this, and scraping away little profits. But if it's allowing you to have the proper psychology and discipline in order to be consistently profitable, then drill that into you. They say it takes about 21 to 28 days to start developing a habit and a discipline. So if you need to, for a month, scale back, have those excruciating low profits that, money-wise are low profits. Percentage-wise, they might be good wins, right? You got to think in terms of percentage as well. But maybe you're scaling back to where it feels like you're doing a lot of work for almost no monetary gain. That's okay. You're trying to build the discipline. You're trying to build the habit, and you're trying to build the good, a consistent strategy where you'll be at your psychology, your consistent psychology there. Now, once you've done that, and once you feel like you've actually gotten that psychology properly dialed in, that is when you can start to scale up your money. But you want to scale it up to the point where you're not going to get undisciplined again, and you're not going to start ruining that good habit that you created, that good habit and good discipline. But it looks like you said it's been insulting to the point where it's insulting, and the past 3 weeks of trading have been phenomenal. So it sounds like you're doing the process right. Now that you've scaled back, your discipline is more focused. You're not really breaking those rules that you've established for yourself, and it's working for you. So you should know that you've got the strategy down. If you've had a strategy for 3 weeks that's been profitable, you've got the strategy down. Now it's time to dial in the psychology and the habit and discipline that comes with that psychology. So I would say keep going with it, man, and be patient. Trading is not a get-rich-quick scheme. It is also not for the weak of heart, the faint of heart. It can be very stressful. It can be very frustrating. But it's about learning the process. And once you've learned the process, then you can start to scale up. Once you've learned your discipline and how to stay disciplined, then you can scale up. But until you can do that, and you have to be brutally honest with yourself too, brutally honest with yourself. Until you can do that, you're just going to be, in some ways, cheating yourself out of, money that you could be making, or, just losing all your money when you shouldn't be. Boomdock Saint, welcome in, John Shanks. It's good to see you, man. I've been in the same place. Yep, I am mainly concerned with the percentage I'm increasing. There you go. So Teal House Coffee and Bakery, you have the perfect mindset. Don't think in terms of the dollar value that you're making every day. Think in terms of the percentage, right? So if you only have a $100 account, but you're making 1% a day, you're making $1 a day, you're going to feel like you're doing a whole lot of work for nothing, right? $1 doesn't even buy you a coffee nowadays. But you're making 1% a day. Now, as that one, first of all, compound interest is the eighth wonder of the world, like Einstein said. And over time, that even starting with a small account like $100, it might take you a few years to build that up to something significant, but you will be able to compound that to the point where you can make life-changing wealth from that. But it's about the percentage at first. So if you can scrape 1% away a day, 5% a week, if you're not including weekends, 5% a week. If you can make 5% a week as a day trader, that's a really good, it'll put you really nicely on that exponential growth curve where over time you can be building significant wealth up in that area there. But monetarily, 1% a day of $100 is only $1. You feel like you're doing a whole lot of work for nothing. But you can also always scale that up. If you can turn $100 into $200, then that means you can turn 10,000 into 20,000. It's about the process. So I would say work on that process, work on making a certain percentage, focus on the percentage you're making per day. And once you've been consistently profitable, making, 3 to 5% a day, that's when you can scale that up and really start to make money. Make a monetary value. Guys, we're dumping here again. And this is why I've been short here. I took that scalp short earlier today because we fell underneath the value area high of the volume profile. And right now, after we fell underneath the value area high, you can see now twice, backtest, reject, backtest, reject. So I am expecting that we could come down to the point of control. Now, we do have a small golden pocket. Let me just throw the golden pocket on there as well. We do have a small golden pocket we're coming into right now. And I did let you guys know in the Telegram, if we do get a reaction from this golden pocket, I might pull out now because I've taken 25% out. I might pull out another 25% at this golden pocket. Looks like we're coming down to it right now, hitting the golden pocket. Let's see if we get a reaction. I want to see a 1 minute candle close, 5 minute candle close above that golden pocket. Right now, that reaction was just a few seconds. I'm not taking anything yet here. Let's see if we actually get this candle, this 5 minute candle to close above the golden pocket. Oil seems to be inverse to BTC. Yes, I can look at oil for sure. And yes, I do think oil's tied into a lot what's happening geopolitically as well. So I think oil's going to be higher for longer, honestly, guys. Turbo still ranging after that rejection. John, we'll look at Turbo in just a minute here. I just want to see what happens here with Bitcoin on this. Guys, this is what I was worried about because we did also front run that golden pocket earlier. Let's see if we get a reaction here, but we want to wait for this 5-minute candle to close. And this, we have about a minute left in this 5-minute candle. And I know you guys have a little bit of a delay, like 15, 20-second delay on the live stream. But let's see if we can't get this close above the golden pocket. So above 74,958. If not, then I'm not taking any profit and I will wait until we can come down a little bit lower. And also, guys, in that scenario of all those stacked 1-2s, 1, 2, 1, 2, 1, 2, this we would want to see continue. We would actually want to probably see it continue to take out your 73.3K lows, or at the very least, your Sunday lows. So let's see if we can't get something of that scenario coming in right now. Now, this scalp trade for me was a 5.5 to 1 risk to reward ratio, which is, you're risking 1% to make 5.5%. So even though this is a relatively small move within our larger, 2-month long range, you can still make your, I may, if I didn't trade, if this was the only trade I took this week, I would still make my 5% for the week, right? If this wins fully. Now, it wouldn't be a full 5.54% because I did take some profit. I took 25% out there, but let's say it would be very close. All right, 5-minute candle closed. We are at the 0.65 support. Let's see if we can't start to get back above this golden pocket. So far, we're not really seeing the reaction we want to see, but if we do start to bounce here, and let me go into our order flow. Oops, our order flow. Decrease in OI here. So just positions closing out. Man, you guys, what we saw though last night, and I was asleep for all this last night, but this move up that we saw last night here, it was all new long positions opening up near the highs, into your golden pocket. You had your golden pocket right up here. You had all these positions opening up were relatively fresh long positions that were opening up. Look at all these fresh longs opening up. And a huge spike in open interest here. So for us to see now, we're starting to crash down. We're stopping out all those long trades. What is the stopping out of a long trade? It's a market sell. That's why we're starting to see the CVD go down. But we also know our open interest is going down. So it's not new short positions that are entering. We're just stopping out all the people that long the top of a move into a golden pocket. Okay, not seeing the reaction we want. Let's see if we can't get that dump down through here. Yep, we're starting to dump down, lose the golden pocket. Now, guys, if we are going to be in a wave 3 to the downside, we might not bounce. We might not bounce at all until we get to value area low or until we take out those weekend lows, those Sunday lows. So let's see if we get some reaction within our smaller support levels or if we're going to nuke. Crypto Clan World, welcome in, my friend. And Benny Blanco, also from the Bronx, welcome in. What is your base case on higher time frame, like 1 week and 2 weeks? I think that, Benny, I think we could come up into the mid 80s, low to mid 80s in the next month or so. And then I think we're going to dump. I do not think 60K is the low of the bear market. So I do think we are going to make one more macro low in the bear market. And I like that 58K region. All right. We're starting to get a nice reaction from the golden pocket. Yeah, so I think we do have one more macro low. Hold on. I'm sorry, Benny, and I will continue to answer that. I just want to see what's happening here. If we're seeing fresh long positions step in right now. Not really. Just a little bit of take profit. We're just seeing some shorts take profit here, guys. There's not too much happening. If this is going to be a wave 3, we want this thing to continue to break aggressively to the downside. All right. Wow, I'm behind. Okay. I'm off all week just chilling watching on my trading view and count on my TV and surfing all week. Okay, cool. Boondock Saint, that's good to take some time off, man. John, good for you for doing that. ASCII Cato, what's up, man? Welcome in. False Prophet, much love to you, False Prophet. It's good to see you in here, man. How you been doing with everything? I know lots been going on for you. All right. T&B Willa, welcome in. It's good to see you as well. It's been a while since I've seen you in here. Chris Wimmer, thank you for the comment, man. I appreciate that. Welcome to the community. And I just, be myself here and do my best to kind of help you guys with whatever my knowledge of the market is and my experience of the market. So thank you for being in here, man. And thank you for the kindness. Yep, dump it a bit. Let's see, range rotation time. Yeah, I mean, guys, so here's the overall. Now we are starting to see a nice reaction here from this golden pocket. If we can reclaim this prior low on the 1 minute chart, let me just, hold on. Let me hide my trade real quick. So coming up to that prior low on the 1 minute chart, this is just 1 minute trading, guys. If we reject here, I would expect us to continue to drop. If we can get back above this, I am going to take out some more profit on my, I don't know, I put SFP there. I just wanted to make that white. If we can reject here, I'm not taking any profit. If we start to get back above it and close back above it, like a 1 minute candle back above it, I'll pull some profit out on the short, another 25%. So far, it looks like we're starting to see a little bit of a rejection there. Let's see if we can't continue down now. But yeah, range rotation time. The thing is, guys, we fell back inside the volume profile. The whole reason I took the short this morning is because we started to fall back inside of our volume profile. And if you fall back inside and get stuck back inside your volume profile, you're likely to rotate it at least to the POC, but generally you rotate and fill the whole volume profile. P-stocks just broke down. Iran advance backed out. Okay, wow, guys, this could be our catalyst for a big move down. In a short, currently 76,133. Nice, Chris. 76,133. Yeah, so you're even. I'm about 76,000. I think mine was 75,943. I entered a little bit in here earlier today, so it looks like you're in a nice little scalp short. It's sometimes right. Welcome in, man. Good evening to you as well. Thank you for the comment too, man. I appreciate that. Yes, that bigger trend line. Mark Dutch, I typed sexy ASMR for a quick wank and Google sent me here. You know it, Mark. I got the whispers that wank. It's good to see you, Mark. Much love to you, man. I look forward to every time you come in here, whatever you're gonna say with that first comment. On demand, cheers to you as well. Okay, guys, seeing a little bit of a rejection from that prior 1 minute low. So yes, we are at our golden pocket and we could consolidate here for a bit. Like we could do something like this and ultimately hold it and start to push back up. But remember, we fell back inside the volume profile. Let me just go to the 12-minute chart. We fell back inside, tried to see that breakout of the volume profile. We did reject from the golden pocket. And now we're starting to fall back inside the volume profile. So it's likely that we are going to see lower high, lower low. And if we're going to see that, what if we would want this to be impulsive, right? This move down here to be impulsive. So the only way to count that move down impulsive right now is just a bunch of 1-2s in here. 1, 2, 1, 2, 1, 2. We would want to see this starting to break down really aggressively in that 3. And then we would want to see some 4-5s coming in. That selling exhaustion that we get towards the end that would give us that bull div. And in that scenario, we don't really want to hold this golden pocket, right? We want to kind of bust through this golden pocket real quickly. You might have one, 12, 15 minute green candle in here, but we really want to continue this down. Sometimes I tried to use Grok, but it used me instead. Yeah, I think that's with a lot of AI. It's going to start using us all, right? Previous day value, area low, and golden pocket. Okay. And we do have some very internal liquidity that's just below that. I mean, that is something to watch. It's not the greatest amount of liquidity. If we go onto our liquidation heat map, let's go to the model 2 real quick. I mean, yeah, we did have some local liquidity that was down there. And let me just check this here. It looks like it's been taken already, and we didn't get much of a move from it. If we're looking there at that heat map, you can see that liquidity was taken earlier today, but it just gave us a little, actually that was the low, this low from a couple hours ago, but we just got this little 3-wave move up, and now we're dumping again. So we've already taken that local liquidity. Also, if we look on this is the 12-minute chart, but we were developing some nice bull divs here. It could be about to get invalidated with this. If this momentum wave comes down here, it's going to invalidate this bull div. And look at your money flow is just crossing back into the red here. Crossing back into the red, or it's been in the red for a bit for NAMI. I want to go on to the 1-hour chart. I mean, we did see the bear divs, guys. We did see the bear divs. And also on NAMI, we're now invalidating those local 1-hour bull divs that were possible. That's not a good sign. It would be nice to come down to take out those weekend lows. Though this low here at about 73,750-ish was a weekend low, Sunday low. And we do know that Sunday lows and Sunday highs are more susceptible to be taken out. So I guess if this is a 3-wave corrective move, let's look at that trend-based Fibonacci extinction again. I'll throw that on the chart real quick. And did I delete it? I guess. So between the 1-to-1 and your 1.236 is your main zone, but the minimum target for that is going to be the 618. And yeah, I guess if we come down that low, it would be a full rotation from value area high to value area low. But knowing that we have that weekend low just below it, I would actually want to see a bit of a wick past it to grab liquidity and then hold it and start to make a move up. Okay, I am way behind in the chat. Yeah, Chris, I've been a part of Jay's community for quite a while, so thank you for coming over. Thank you for joining us, man. Jay's a great man and a great trader. I respect that guy so much. Chi-chan, welcome in. Mark Dutch, you naughty little one. All right. We got the naked point of control from the area since the 13th of April until today below actual GP on Bybit. Let me see. Naked daily point of control on Bybit. I know our naked daily point of control on Coinbase is it's a bit lower. Now, yeah, it was naked until earlier today. We hit it earlier today. That was just from yesterday's naked daily point of control. So that's been, and then the next big naked daily point of control is right below our range lows, which is that 1-to-1 trend-based Fibonacci extinction. So if I take it on this chart, that 1-to-1 trend-based Fibonacci extinction, okay, it's a little bit higher actually on Bybit. It's at 73.1 on Bybit. On Coinbase, if we go to Coinbase, you'll see that it's a bit lower. It's at 72.2-ish, 72.250-ish. So I do like Coinbase volume levels better. There's also better confluence with that naked daily point of control on Coinbase. And we have to remember, if we're thinking in terms of volume profile trading, we're in a couple different ranges, right? This range has been going on for about 8 days now, since last Monday. We're still inside of this range. We have now broken back inside the value area of the range after attempting to break out over the past 24 hours. And then we have our prior 15-minute range, right? This range from the week prior. Now, if we pull the volume profile for that range, you can see that our value area high and POC are very close together, and they're right in that zone, right? So this is our a zone of support. Value area high, anchored VWAP, POC, naked daily POC. It's all right in this zone. A lot of confluence here for me. Because if we look at that naked daily, you can see that naked daily's in there. And I believe we have a daily as well. Let me see. Did we have the daily in there? No, we do have a daily near our weekend lows, though. All right, what's happening here? Attempting to see a bounce. Not any real long positions. So you can see how our CVD on the 1 minute is going up here. I guess there was some long positions that stepped in, but not too much. You can see about 3 or 4 minutes of some long positions stepping in this general area here. All right, as soon as we start to break above our 618, I'll take some profit on the short. Just lock in another 25%, just in case. Sometimes you will just see this, and then you get that continuation. Rather than risking 1% per trade, I've been risking about 0.25% per trade. So my percentage gains are a quarter of what they should be. Well, Andrew, that's okay for now, man. Like, work on the process, and good for you. You know, good for you for being aware enough and disciplined enough to do that. And once you start to get a strategy down, and Andrew, one thing to remember is with risk and reward, I think it's the most important thing in trading, actually. You can actually lose 70% of your trades and only win 30%. But as long as you're taking a risk-reward ratio, an asymmetric risk-to-reward ratio, a 1-to-3 risk-to-reward ratio, you can still be profitable winning only 30% of your trades. So, and if you can get even to break, you know, winning 50% of your trades or 60% of your trades, man, that, you know, I get that not every time you're going to get a 1-to-3 risk to reward ratio, especially if you're a scalper. Sometimes you're good at a 2-to-1. I try to take trades that are at least 2.5 RR or higher. Now, if you can develop a strategy, you know, with your confirmations, everything, you don't have to take every trade that's presented to you. Say you get a decent trade, for instance, in this short earlier today that I took, I took it right around this area here when we started to fall back inside the volume profile. If I would have said, okay, I'm entering short here, my stop is going to go above the overall high, and I'm going to be targeting that POC, that 786 POC. That's only a 1.76 to risk to reward ratio. Sure, you know, that could play out still. You could win that. I didn't like how comfortable that stop loss was, and I knew that if I broke these series of lower highs, then it's probable that we're going to sweep up and sweep all those highs anyways. So for me, I said, okay, I'm going to adjust my stop loss and I'm going to put it right above that first lower high. Lower high there. And if I get stopped out, yes, I get stopped out. I lose that trade. Right now, I've already taken profits, locked in profits on that, so I'm not worried about that. But it gives you a much better risk to reward ratio, right? And I think my actual risk to reward ratio is around 5.5 on my short. On that, yeah, about 5.5 there on that. If we do make it down to that 786 and POC, 786 POC's coming down there. And the thing is, if we are going to see a 3, I don't like how we're seeing a bounce right now. I would like to see it roll over soon. We don't want to get back above the 618. Actually, we're already back above the 618 of the golden pocket. So at 74,958. But if we're going to see that, like I've been saying throughout the stream, if we're going to see all these be 1-2s in here, 1-2s, that was horrible. 1-2, 1-2, 1-2, you want to break this down. Could we see one more 1-2? Like a 1-2, 1-2, 1-2, 1-2, and then start to really break down. It does happen on lower time frames where you get a bunch of them stacked together, and then you start to see those 4-5s towards the end. It does, but we want to see this breakdown, and we're starting to bounce here. Oil pushing up. Yeah, oil is interesting. I know I said I would look at that, so let me see here. Oil, U.S. oil. Pretty much the same thing as CL, USDT. But we are breaking back inside of our volume profile. You can see first of all, gapped back up into it, held it throughout the day, and now we're pushing up. But I would still be aware of, because your market structure is bearish, right? Low, lower high, lower low, lower high, lower low. So could you get a lower high here and continue this down? You sure could. What I would be looking for is this. You want to see a 3-wave move, right? And if we pull our very local trend-based Fibonacci extinction here, you'd be coming up, I guess, yeah, you would still fill the volume profile almost if you come up to that 1.236. And then you would also break market structure bullishly by breaking that high at around 95.18. You're coming up to the 618, and that's probably where you would want to reject. Also, if we pull a Fibonacci retracement from our last 4-hour high to our 4-hour low, make sure that's on there. Yeah, you're coming up into the zone right now. 786 and 618. Trend-based Fibonacci extinction of the 618 and the Fibonacci retracement of the 786. I have to say, you were seeing very slight bull divs on NAMI between these two lows. You can see those bull divs coming in. You're also seeing money flow. You were seeing bull divs on money flow, and money flows crossing into the green. It's about to on Market Cipher and on NAMI. I do think oil is going to be higher for longer because of what's happening. And of course, if the geopolitical talks are breaking down, that's going to cause a lot of the market to think, there's still going to be a shortage on oil, which is going to cause oil prices to continue to rise. So could we see oil continue to push up? Yes, we could. For some reason, it will not give me this volume profile. Yeah, and unfortunately, we just don't have the history on CL that we would want to see. It doesn't look too bad right now, to be honest, for a continuation up. Now, let me get back to the U.S. oil chart. And if we were going to look at a more bullish scenario on this, because we are breaking back inside of our volume profile, and the fact that we're breaking back inside this volume profile here, if you're going to continue pushing up in an impulse, I mean, we have a lot of lower highs, liquidity, and even liquidity coming up. And then you have this liquidity, which is nearly a double top up here, but not quite. You're going to want to see this impulse, right? Wave 1, wave 2, you want to see this 3 kind of extend. And I would say that you'd probably want to take this out. Your 3 continue, take that out. See a pullback to back test value area high, and then continue here. And if we look at that 1.618 target, it is going to be right around those highs. Okay, seeing that rejection from the 786. What's Biddy doing? Little bit of a rejection, not quite confirmed yet, but let's see if Bitcoin. All right, Bitcoin's bouncing from that golden pocket pretty nicely now. I'm going to take some more out on that short trade. I should have been paying attention to that. All right. Nice bounce here. Very nice bounce. Now, if we break market structure bullishly, it's this high in here, right? 75,925-ish. Looks like we are starting to see some nice impulse of price action. Let's see, are we seeing... Yeah, we're seeing some longs, not really. Like right now, we're seeing a short squeeze. A little bit of a squeeze up. You see how we have this big decrease in open interest on this last candle? If we start to break this high here, I mean, we could very quickly come sweep all of this. Very, very quickly come sweep all this. And if we look at that 5-minute channel, actually, I would want to pull this. Pretty nice little reaction. I mean, this was a little bit caused by some news of those talks breaking down. Are we just coming up to fill a little bit of the imbalance that was created there, and now are we about to drop back down? That would suck because I just took some profit, but a win's a win. If I do well early in the day, do you stop trading? Teal House, I don't. Like, some people will trade New York session only. Some people will trade London session only or Asia session only. I really don't trade as far as sessions go. What I do is I set alerts at levels. And if it comes up to that level or down to that level, I don't care if it's New York or Asia, you know, unless I'm like eating dinner with the family or something. I will take the trade if I get confirmation no matter what session. But let's say in New York session, I have a couple quick wins first thing in the morning in New York session. I still will trade the rest of the day if a trade setup presents itself. Now, I might be a lot less aggressive that day, though, right? So let's say I get a couple good scalps during New York, and maybe later that day in Asia, we've dumped down to a key support level, and I see confirmations to enter. It's not like I'm not going to take that trade just because I've made my certain percentage for the day. If the trade is there, I'll take it. Meaning that if we dump down to a certain support level and I see my confirmations to take the trade, I'll still take it, even though I've had a good day. Let's see. Life came at me fast today. Realized they're not MILFs anymore. They're just women my age with kids. Yeah, right, man. I'm sorry, Time Attack, right? It is it's a tough thing as you get older, right? Yeah, BTC is pumping, Dr. X. It's starting to pump a little bit. Not quicker. Welcome in, man. The tire market is going up through. I just got a bunch of alerts on TradFi. Oh, so the TradFi markets are starting to pump. Okay. Big Nick, welcome in as well. The news driven PA. Yeah, this is news. And guys, with what's going on geopolitically, it has been a little bit more volatile lately as far as what the news is doing to the markets. Yeah, another thing Teal House Coffee and Bakery, a lot of beginners do is they overtrade. They try to get into every trade that presents itself instead of the ones that are the highest probability of playing out. I've been there myself where you feel like with your psychology, you have to always be in a trade or you have to always be taking trades. Like I need to take 5-6 trades a day in New York session or whatever, so that is a trap as well as far as psychology goes. You do not have to get into every trade there is. There's always going to be another trade that presents itself. And if you miss a trade, there's no reason to FOMO and try to take bad trades or force bad trade setups to make up for that. So one of the things that I will do is I stopped doing is I started taking trades that only had better probability and also with that better risk to reward ratio. Mark, you say if you take 3 losses in a row, I close my laptop. 3 wins in a row, I close my laptop. Okay, well, that's a good strategy too. Different things work for different people, guys. So, like, if you're on a heater, you can get over cocky with it too as well. So, like, say you win if you're scalping the day and you win like three trades in a row. You can start to get a little bit cocky. It's just like short-term cockiness on, hey, I'm having a great day. So sometimes it is good to walk away. Sometimes it is good to, or at least slow down. I'm not saying necessarily walk away or whatever, but everyone's psychology is different too. So you have to be brutally honest with yourself on what your psychology is. If you know you have kind of this addictive gambling personality where if you win a couple trades, you're going to start loosening up on your discipline, start getting a little bit of an ego for the day, and you're going to start taking trades you normally wouldn't, then be aware of that psychology and do that. Close the computer, walk away for the day. If you know that you can still be disciplined. If you win a few trades, you can kind of calm down for the rest of the day. But if a trade presents itself, you'll still use proper good risk management, proper discipline. Do that. Do whatever will work for you. Jesus Save 77. God bless you, man. Thank you so much for coming in. And Quiet Alpha 89. After 10 plus years, I only focus on macro moves. Yes, a lot of traders that have been doing it for a while focus more on the macro moves, swing trades to like day trades, right? Or I would say when I say day trades, it might be a trade you hold open for 2 weeks, right? Like the trade from 65K up to the new range highs. That also works a lot better if you have a bigger portfolio. Because generally, if you're only doing the macro moves, you might only enter, 1 trade a month or 2 trades a month, or maybe even 2 trades a year. 2 or 3 trades a year. So generally that only works if you're trading with pretty large account size. And if, one trade, you may say maybe you make 10% on that one trade, 10, 12% on that one trade, but you're trading with millions of dollars. That's still enough to kind of sustain you for the year. Now, the people that generally have smaller portfolio sizes, they are going to need to trade a little bit more in order to, if they want to do it as a living and make, proper income off of it. Bullish on Parade. It's good to see you in here, man. What do you think of that daily move on the S&P 500? Let me see that S&P 500. Still bullish. Let's see. I mean, I would say this could be a flat in here, honestly, guys. You did come up to your 0.9. It doesn't look like you took out the high, but in an ABC flat, you kind of have your A wave, your B flat. The minimum target is a 0.9. You can come all the way up to the 1.382, and then you're looking for your C wave to take out the A wave low. And this does look like a flat in here to me, I would say. We can pull that Fibonacci retracement. And let me do the, 886. Yeah, so you probably did hit the 0.9 Fibonacci. Let's just do this. Yep, 0.9 Fibonacci hit. And then now you're dumping here. I would expect to at least come take out the low. Did we actually take it out yet? You're double bottoming with it. Maybe you did touch it. Yeah, maybe you took it out. So, wow, big pump on the ES right now. Holy cow. What kind of news is happening here? This is a pitchfork band, though. This resistance right here is a pretty tough pitchfork band that we are trying to break above. Wow. You are developing some pretty bad bear divs on the 6-hour chart here. You can see higher highs here, lower highs here. Your money flow's finally starting to top out here on the 6-hour. I like to go on to the 8-hour. For me, Market Cipher B on the 8-hour has a really good money flow. And yeah, you're starting to see bear divs, money flow topping out. You also see the bear divs on NAMI here, money flow topping out and starting to roll over. The bearish scenario is that this isn't a flat, like an ABC flat, and you're going to continue up. The bearish scenario is that, you know, even though this 1, 2, your 2 came up to the 0.9, which is very rare, but you would want to see this continue down. So you'd want to break past that low pretty aggressively. I'd have to say with the move we just got, it's looking like we want to continue up a little bit. What's going on with Bitcoin? Yeah, guys, we're pushing up pretty nicely from that golden pocket. We're still underneath the value area low, though. Or excuse me, value area high. We're still inside that value area high, but I have to say this is looking pretty choppy in here. And I don't like how much overlap is in here. If we're going to get a big 3 breakdown, we need to see it soon. Because if you're going to continue to get all these 1, 2s, 1, 2, 1, 2, 1, 2, 1, 2, you're going to need to see that big breakdown soon. And if we start to break market structure bullishly by breaking any of these lower highs, I would say it's a very high likelihood we're going to sweep all of it and come up to 77.1 at the very least. But we might sweep even, you know, up to the 78K. Yeah, staying sidelined is the best trade a lot of the time. You're right. You know, if you don't have that clear trade set up with a good risk management and with proper confirmation, you know, for me, guys, I miss a lot of trades because I don't have proper confirmation on NAMI and Market Cipher B. But I'm okay with that because if you stay disciplined in your own strategy, whatever your confirmation strategy is, you know, it could be a break in market structure. It could be using, you know, bullish divergences and money flow with these, you know, indicators that I use. I use a combination of both of them. But I do miss a lot of trades because I don't have proper confirmation, and the trade will play out like it'll say it will come up into a resistance, hit resistance, and reject just like I was wanting it to. But because I didn't have proper confirmation, I stayed out. And yes, it's annoying, but at the same time, I know that like if I have the proper confirmation, it's a lot more likely to play out. Sometimes it will play out without proper confirmation, but you have to be okay missing trades, and you have to be okay not taking trades. If it comes up to your area and you don't have proper confirmation, you have to be okay not taking that trade. Hide this. It's an absolute market maker's paradise right now. Yeah, low volume, negative CVD, negative Coinbase premium, but price is at 75K. Market makers are wreaking havoc for sure. Yeah, that's it. I will not be available when good trades come, and I will FOMO. Yeah, Teal House Coffee and Bakery, that is just something that you're going to have to be honest and catching yourself with. Like the times that you want to FOMO the most, like psychologically, when you want to FOMO the most, that's the time when to have a clear thought and say, whoa, stop it. Like I can't do as much as I want to FOMO right now. I can't. And I get how powerful of an emotion FOMO is because I've been there. I'm still there. I still FOMO at times, guys. I think everyone that's a human does kind of compromise on their discipline at times. The thing is, you can't be consistently compromising on your discipline, and you need to stay disciplined for the majority of your trading. So it's just something also that you'll get with experience in the markets. Like the more years you get into trading, the better you'll get at fighting that FOMO. And also, one of the big things that Jason taught me that has helped me tremendously with my psychology is the schlong, right? You know, I'm short from much higher. So I do I have some FOMO that this could have dumped really hard? Yes. I mean, I did add to my short at this golden pocket yesterday, at this high yesterday. I added to my short from 78. But if you're a short from higher and you're long from lower, by the way, guys, I'm still long from that Tuesday. We were streaming during this pump on Tuesday when Trump was going to destroy an entire civilization. And remember, we got into the scalp long. I think we were looking at this super small range in here. We broke out of the range. We were back testing the value area high of that range, and we entered the long on the bullish back test. And then after I closed the stream, we pumped up like $4,000. So I'm still initially in that long position from here. I've taken out 75%, and then I recompounded it a little bit, and I think it was in this range, this part of the range here. But I'm long from lower. I'm short from higher. And if you can get into those good trades, take a TP1 and leave a little bit to run. That does help with FOMO. That does help because if you're in no trade, then you're getting a lot of FOMO. Oh, I need to get into trade right now. If you're already in trades that have taken a TP1 and that you've locked in as a guaranteed win, it does help with that quite a bit. All right, I think we're about to break market structure bullishly locally, guys. If we break this high here at 75,936 on Coinbase, we could run all this really quickly. Normal Swede, welcome in, my friend, and thank you for the news. Ceasefire's been extended, guys. It looks like the ceasefire's been extended. That's bullish news. Remember the last time we got a delay on the fire, I guess I should say, on the firing of a civilization? That was a few Tuesdays ago, right in here, and we got a pretty aggressive push up. So maybe this does give us an aggressive push up here today. I don't want to base the TA on news. That is something, if you do as a habit, you will end up, news gives false moves a lot of the time, or pumps and dumps, or dumps and pumps. So you don't want to get into a habit of like longing on bullish news and shorting on bearish news. But this geopolitical news events that are happening right now are having a huge effect on the market, because as we know, oil is kind of like the global economy itself, is like the flow of oil, the trading of oil. And this geopolitical conflict has a lot to do with that. Odyssey, what's up, man? Welcome in. Yeah, some people miss trades by putting a stop loss to a break even. I miss them by putting TP to break even. By putting your TP to break. Oh, man. Well, I get that, man. Yeah, the thing is with moving a stop loss to break even, yes, you will get stopped out some of the time. Like it will double top or double bottom and you'll get stopped out, and then it will do the move you wanted it to do in the first place. So Yeah, it's tough, man. It's trading, guys. People think trading is easy. If trading was easy, everyone would be doing it. If there was some magic bot out there that you could just throw $5,000 into, like my buddy hit me up the other day about some trading AI bot, and he's like, "Hey, this AI bot, I heard if you just throw like $1,000 into it, within a few months you can have like $100,000. Like, should I do it?" I'm like, bro, if there really was an AI trading bot out there that you could throw $1,000 into it, and in a couple months you'd have $100,000, I'm like, and they're selling it to you for $49.99 a month, like for the subscription. Like, do you think that's real? Like, come on, dude. Like, everyone in the world would be using that, and the big players would just throw in $1 million into it and have 100 million in a month. No way. Okay, let's see. Guys, we do have some of the altcoins are looking pretty nice. Like Ethereum. Ethereum is overall holding the value area low of the range. Yeah, getting some wickage down below it today, but I do think we might be able to see that move up on Ethereum to value area high golden pocket, and we do have some liquidity that's resting right in there as well. So 23, 76 to about 23.91-ish. I do think even if it's going to be a 3-wave corrective move, making a lower high before rolling over, I do think we might be able to get a move up to that golden pocket. And that's also going to be your value area high, right? Value area high, golden pocket, liquidity. Naked Daily's a little bit lower than that. I don't like that, but and the Naked Weekly from last week has already been hit. And then last Friday, I talked to you guys about Solana. The only 2 trades that I was in, actually, I think it was last Tuesday's live stream because we hadn't come up here yet. But I told you guys we were looking at our larger 2.5 month long range on Solana, this range in here. And I said that really the only 2 levels that I was looking at was this purple box, and then we had a green box at 80.55 because our current golden pocket was at 80.55. If we pulled it from this low, I think it was to this high. Yeah, 80.55 golden pocket. And then you also had liquidity, and your value area low was down there. So we were looking at either a short from up here or a long from down here. We ended up coming up first and getting the short. Now on Solana, I'm still looking at pretty much relatively the same thing. We did end up getting a very nice short from that naked monthly point of control, golden pocket, value area high. Now, if we do break this POC down and this channel down, then I'm going to be looking at the golden pocket to the downside, now pulled from that low to that high. It's about 81.6 to 81.5. You can see we have a fresh daily level at 81.5. We have a golden pocket at 81.6 and our value area low. And then we have some important liquidity resting down there as well. So really between like 82 and 81.3, we have some really nice support. At least I would say you at least get a scalp off that. It might end up in something like this just to backtest POC and then drop. But I would say you could probably still get a good scalp off that. Taco trade, right? Shoot, what is, I forget. Trump always, what does taco stand for? I know, Mark, you talked about that earlier today in, I think it was Jason's live stream. It is Taco Tuesday. You're right. Oh my gosh, Mark, you're right. A while back on Gate Exchange, there was a cool feature where you could backtest custom strategies and see how profitable it would have been in the past. Wow. Yeah, backtesting strategies. I know there are even TradingView, you can backtest strategies on TradingView as well. But I'm talking about like some people think there's some magic bot where you can Trump always chickens out. Thank you. Yes. There's some people who think you can just literally throw money onto an AI account and the AI will trade it for you. I did watch one guy who threw $5,000 in it, and 3 months later, his account was up 8%. And that's not horrible. It's definitely not what we would want to do as a trader, manual trader. You could do a lot better, 8% in a week maybe instead of 3 months if you had a good week. But I'm just saying if those bots truly were everything they said, a lot more people would be using them. Yeah, Trump always chickens out. Okay. I say taboo. Well, he hasn't tabooed yet, but hopefully not, right? White Wick Rider, Ned. Yeah, I think copy trading or like grid bot trading can work in trending markets. So like if you're in an uptrend and that uptrend, like a bull market uptrend, especially if you set that grid trading bot to more of like an overall mid time frame or high time frame trend, grid trading bots can be really nice for that. Or when it longs every low that you put in and then like sells at the highs. I know there's a couple people. One of my ex mentors uses bots with pretty decent success, but that's more of like a grid trading bot. Are we going to take out this high? Let's see. What are we seeing here? I mean, our open interest still is relatively going down here, guys. And even the possibility, now I don't think this is going to happen, but right now, technically, we're seeing bearish CVD divergences, but I don't think it's going to last very long. So between this high that we just created, an hour ago and this high, there are lower highs in here. We have significant higher highs in the CVD. So that is seen as bearish CVD, but it's on a decrease in open interest, which you don't want to, that's not ideal to see there. Plus, I think that high is going to be taken out pretty soon. Now, if we start to roll over, that bearish CVD looks a little bit more interesting. Like if we roll over right now and start to drop a bit. No, 8% a week is a really good week, Mark. Like, yeah. Like that's a hell of a deal. Or a hell of a week there. But there are times like God, that scalp trade that I did the other day, a few Tuesdays ago. Where was it? It was right in here. Right in here. And we had a 0.23% stop loss on that scalp trade. And I took a 50% TP and let it run, and it ran all the way up to 72K. And because my stop loss was so tight, my position size was able to be pretty big. And like, it was a nice win for me. Bitcoin 12 hours holding above the 200 moving average, and the 50 moving average is climbing up. We will want to see a golden cross in a week or so. On the 12 hour, like daily golden cross, actually, I don't follow golden crosses and death crosses too much, but isn't it usually like after the golden cross, a couple weeks after golden cross, you start to dump, and after a couple weeks after a death cross, you can start to pump? Let's see if there's an indicator for that. It looks like we got, according to this indicator, and I don't know what EMAs or MAs they're using, 13 in the 50. So you want to use the 200 in the 50. This is on the daily, not the 12-hour, but all right, so you got your death. Wait, that is the golden cross. Yeah, I see what you mean. You could see that 50 move up over the 200 in a couple weeks here. If we're able to maintain, if we start to dump here, it's not going to happen. But see what I mean? Like the last time, well, I guess this was a bearish cross, huh? It was above it, cross down below it. That was your death cross. Yeah, I guess you did dump pretty hard after your death cross. Golden cross here, you did pump pretty hard. Okay. Golden cross here, you pump pretty hard. Well, it'll be interesting to see what happens there. We are, I would say this. Let me get rid of this real quick. What we want to see is this impulse from 65K does look like it's starting to get more towards an end. And if you are even going to make one more little high in here, or, you know, say it's a kind of a blow off top in a wave 5, you come up to 82. I wouldn't say this is likely to continue and like just go straight up from here. Continue to go straight up. If anything, you're going to see this impulse end. You're going to get a decent pullback. And then you would start to see that big push up. And in that case, you would have to say maybe like a 1, 2, 1, 2, and then you get your big 3. And that's on high time frame, right? That's on like the daily, the 12-hour. I mean, look at the bear divs that we got already confirmed on the 12-hour. Higher highs in here, lower highs in here. Now your money flow still looks strong, and that's why it's not really playing out yet. Generally, the bear divs, a single drive of bear divs will not overpower a bullish money flow. And right now, money flow on the 12 hours looking pretty bullish here. Cross dressers, yes. Of course, Mark, that's what you're thinking about, the cross dressers. Mark's. Yeah, very trendy markets. I did most of my backtesting on EMA crosses when it was all I knew. Well, I do know that there are some, like Crypto Clown World in here uses EMAs and moving averages, and he does use an EMA cross strategy and stuff like that, and it works for him. Oh, thank you, Mark. Yeah, guys, please hit the like button if you got any sort of insight into the market from this live stream. I do want to take a second here to shout out the partners of the channel. Let me just get onto the 15-minute chart real quick. We'll keep an eye out for this break in market structure. But real quickly here, guys, the main partner of the channel is BYDFI. They are a VPN and a KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description, you can get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts in trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in those futures trading markets. And guys, we're trading the USDT futures markets anyway. So just by trading on the exchange, you can earn up to $8,100 in extra Bitcoin, extra USDT. They're also offering some of the best initial deposit bonuses in the entire industry. Like for instance, if you deposit $100, you can get a 50% deposit bonus on that. Most exchanges will only give you 20%. And then they're giving you 20% deposit bonuses up to $1,000. And they're giving you 10% deposit bonuses up to $20,000. So some really, really good incentives, much better than some exchanges will give you. Most exchanges will give you. If you are interested, I have partnered with BYDFI as well to create that Telegram community. It is a private community, but it is free. All you have to do to get into the community is join BYDFI using my affiliate link and deposit a minimum deposit of $100 or more. You can deposit more if you want to get some of the better bonuses there. But once you've signed up and deposited the minimum amount, you can click the Telegram link in the description of this video. And in that Telegram verified channel, you type in /verify and then your BYDFI user ID, which is going to be a string of letters and numbers probably for you. It's going to be right up next to your little character guy. But /verify and then your BYDFI user ID. That'll put you into the main Telegram. And once you're in, you're in. The second partner of the channel is another non-KYC exchange that I've partnered with. It's Blowfin. Blowfin is a really great exchange. They are offering VIP1 for 30 days. If you deposit just $5, you can receive a $10 voucher. That's for the first 300 users only. And they're also giving some pretty good net deposit bonuses or initial deposit bonuses as well. You can see you can get 20% on $100. I know BYDFI is doing 50% there, but you can get 10% on $10,000. So if you deposit $10,000, you can get $1,000 of futures bonuses there. With both BYDFI and Blowfin, you do need to KYC level 1 to get the net deposit bonuses or initial deposit bonuses. But those are the two non-KYC exchanges I'm partnered with. And I also partnered with 2 KYC exchanges, just in case some of you guys like to use those KYC exchanges. I have Bybit and MEXC. Bybit is offering up to $30,000 in futures trading bonuses. MEXC is offering a 10% initial deposit bonus up to $1,000. And then lastly, we have NAMI trading. And NAMI is this momentum and money flow indicator you see here at the bottom of your screen. And for me, I use it for confirmations on all my trades. So as we're coming up to a key resistance or coming down to a key support, I'm looking at NAMI to see, as we're coming into a box of support or resistance, if we have bear divs on the chart if it's resistance, bull divs on the chart if it's support, looking at the money flow to see if I have money flow curving to the upside or money flow bull divs. And since I've been using NAMI for confirmation to enter trades, it's really helped me get into the good trades that are more probable to play out and to stay out of the bad trades that don't have proper confirmation. And they're obviously less likely to play out. And for me, it's really helped me. So I've been using NAMI or Market Cipher B for about 6-7 years now. And I've been using NAMI for about a year. And since I've combined both of them, and NAMI is a lot quicker. If you're a scalper, NAMI is a lot better for scalping. It confirms quicker. Money flows a lot quicker. I've really been able to maximize my profit taking with using these and really getting into the better trades. So if you're interested in purchasing NAMI, it is a paid indicator, but I was able to partner with NAMI to get you guys 50% off. So if you want that, just click the affiliate link in the description of the video. And when you're checking out on the website, in their promotion checkout box, you type in Divine50 as your discount code, and it will get you guys 50% off. Okay, back to the TA here. Man, guys, we're starting to roll over here without taking out that high. That is where this bearish CVD divergence can play in. Because we can see here, it's just barely, but we have lower highs in the price action here. We have significant higher highs in the CVD. So that is a bearish CVD divergence. It is on a decrease in open interest, so it's not nearly as tradable as if it was bearish absorption. But if we do start to roll over here, I would expect for us to at least make another new local low. And maybe we are seeing a bunch of 1-2s in here. And we're going to see a big dump in year 3. I would say the more 1-2s we stack here, the less likely that is, though. $50 moving average on the weekly is 97K and tilting heavily downward. Isn't it the 200 week? Let me go on to the daily time frame. And I know that 200 week moving average. Let me get to a different exchange too. $200 weekly moving average. Okay. So that 200 weekly moving average has acted as, And why is it giving me all of them? Hold on. Or was it the 200-day moving average? Yeah. So the 200-day moving average historically has held us. When you're holding above it, you're generally in that bull market. And then when you get below it, you're in the bear market. So you can see we crossed pretty much near the distribution of this upper range here. And that is going to be coming in, 86,000. That's a very key level, guys. $86,000. So if we do pump up there, remember that's the value area low of our previous range. Our previous range value area low, our previous macro range value area low. And that's also going to be where that 1.236 Fibonacci extinction is. And that is part in an ABC correction. Common targets, contracting diagonal here in an A wave. You get your 3-wave move in a B. And if you get this as a C, you could come up to 82 or even 86, 87 and still roll over here. So there is a lot of confluence in the low, I would say low to mid 80s. There's a lot of confluence for a major rejection. That's even assuming we can break out of this trend line, right? We're at resistance of this trend line right now. A lot of people are also looking at this bump and run pattern. Let me get rid of this. So I know a lot of the bigger channels are looking at this as a bump and run pattern. Break out of it, bump, and then you run. You kind of see this bump and run pattern where they think that we could come significantly higher. Now, I've seen also on crypto Twitter, so many people are looking at this as this bump and run pattern to play out. And when so many people are looking at a certain pattern to play out, oftentimes the market makers will do a fake out of that pattern. So if we're going to see, like we say we do break out of this, maybe come up to 82K, reject from 82K, only to come down to like 76K, back to 76K. A lot of people are going to be looking for a long at 76, the bump, and for this thing to really run up here. I think we could see something like rejection from 82, come down to 76, only to come up to like 86K, and then roll over. And so many people are going to get trapped longing in this area and not set proper stop losses, not take profit because they're greedy, because they think this thing is going to bump up to new all-time highs or something. And that could be a trap the market makers set over the next couple of months. Yes, Daniel, I saw Daniel from Chart Champions calling that out. That's actually who I was thinking of when I was saying that. Now, Daniel's a great trader. I got to say, like, I respect everyone that puts in the work for their craft. And Daniel is a professional, great trader, and this is a valid pattern that has played out a lot in the past, especially kind of on these bigger runs that we see the upside. We see it on low time frames a lot. And what I trade them is I trade them as like channels, right? So like say we're looking at this thing as a descending channel here, and you're in your descending channel. For the most part, the descending channel's been holding. You did see a little bit of a deviation on that crash low, but you can see for the most part, midline was kind of rejecting us. We got above it. We're at the top of the channel. And with descending channels, you've developed a liquidity trail, right? All of this is a liquidity trail. Generally for this one, you have this liquidity and this liquidity, right? With some internal highs in here. But generally when you break out of a descending channel, you'll reject from a local resistance just to back test that channel. And then you will oftentimes sweep up to at least sweep the second pivot of the channel, which in this case would be 98K. Sometimes you reject after sweeping that second liquidity, you'll reject and come back down. But a lot of the times you will sweep the liquidity of the entire channel. Now, this is on high macro time frame. So I'm not saying if we break out of this, back test this, you're going to go straight up and sweep all of this in like a month, right? 2 months. It's just not likely on the macro time frame. Now, on lower time frame channels, like imagine this was the 1 hour chart. We were pulling back for the last 3 or 4 days. You break out of the channel, you back test it, you would probably make a move up to sweep up those highs. It does happen a lot on lower time frames, especially on like micro intraday trend channels. Okay, let me check the chat here. I'm definitely looking at the 200 daily for a rejection area on this move up. It's pushing down so hard. Typically, that will increase the odds of rejection. Yeah, that 200-day moving average is going to be interesting. Yeah, Mark, we don't hear about people talking about Palu anymore just because now there is a bunch of really good non-KYC exchanges. For a while there, MEXC and what was it, BitGet were like the only two good non-KYC exchanges, but then both of them went to KYC, and now we have some really good non-KYC ones. Mark, you should try Divine 80 and see if it works. Like, maybe it will. I hope it does for you if you do. That's so funny. Do those Apollo ID cards still work? Well, I purchased Apollo ID. Oh, God, when was that? 2023, I think it was. And I think I got the 5-year one. So I haven't had to renew yet. And also, I've been Palu verified on MEXC for a couple years now. So I haven't tried it on any new exchanges recently. So I couldn't answer that for you. Nice. You got in that long at the Golden Pocket, saved by the Blood Rom. That's a decent scalp there. Yeah, we're not really rolling over yet, guys, but this is starting to look a little bit bullish. The fact that we're seeing so much grindy overlap in here, you know, in the bearish scenario, it's a bunch of 1-2s, but in the bullish scenario, this is all choppy overlap. And let's look at our volume actually. All right, well, you do see generally if this was like a descending channel and it was corrective, you would want to see volume going lower and lower and lower as you're kind of grinding down. And then generally you break out on a big spike in volume. And then on the back test, you really start to spike on volume. What I will say is the highest amount within this kind of intraday descending channel that we're seeing right now, the highest amount of volume is at the low we just made. And oftentimes you end corrective moves on a high spike in volume. So was this the low for the day? And now we're about to break market structure bullishly and take out that local high. I still think 77.1 is an area to watch. We do have that fresh daily level at 77.1, and we do have that CME gap at 77.125. So 77.1 a daily level, and then 77.125 is that CME gap fill. Okay, Kite is doing something I'm confused about. How did it stay up and down pretty much all in a straight line? Kite, we can check out Kite real quick. I believe we looked at this earlier this week, or was it last week? But is this the one, Kite? About how did it stay up and down pretty much in a straight line? Well, I'm not sure exactly what you're talking about there. I mean, we've been getting some chop in here. You're definitely starting on this 4-hour chart. You're starting to form a nice little range down here. You're holding the POC. You tried to break out of the value area high, you couldn't, but if we hold this POC, you might be able to at least break up to sweep the liquidity of the range highs, like up at this 16 cent 1677. Another thing, I mean, I don't like it so much, but if we're looking at an impulse down, you know, like a wave 1, 2, 3, you do form triangles in 4, but I don't, it's not perfect though, because this is lower. And in a triangle, you want to see a 3-wave move in an A, a 3-wave move in a B, a 3-wave move in a C, 3-wave move in a D, 3-wave move in an E. You get that triangle that forms. That could be your wave 4. Then you could break down in a wave 5. It's not looking the nicest right now. Money flow looks pretty good on the 4-hour. No bear divs. Yeah, it doesn't look too bad. Maybe this is going to, yeah, I would say if you're looking at a triangle in a wave 4, I mean, obviously all of this was part of a 3 here. So you'd want to look at something like this, and then you would start it from here, and you'd look at a triangle forming in a 4 here. And you'd be looking at the 1, 2, 3, and then this is your 4 triangle starting. And then you get that dump down in a 5. Little early to tell. But I'm not sure if you're talking about lower time frame or not. Grim Reaper Phoenix. And don't worry about the super chat, bro. Seriously. No worries. Yeah, don't Grim Reaper Phoenix, seriously, don't worry. From US living in Hawaii is okay. Yeah, she legit ain't cheap, that's for sure. Time Attack, are you still trying that? Are you did you I know you were talking about giving that a try. Have you been using that at all? Yeah, guys, please smash the like button. You know, don't worry about doing super chats, especially if you guys don't have the money for that. But what you can do to help out the channel and to say thank you and to show support is to hit the like button for me or to share the video. Really, I get paid so little on YouTube, guys. I don't do this for YouTube money at all. I do this because I really do believe in building a good community of traders that all are cooperative with each other rather than competitive, and that we all work together to try to like dominate the markets and make each other profitable, share each other's good ideas, different strategies with each other, see what works out, and all together kind of scrape money away from the market makers every day. And that's what I want to do. I want to build a community of people that are all super supportive with each other. Yeah, awesome, Time Attack. That's awesome, man. I tell you, it helped me tremendously. It really did. And I know my diet is not near as clean as Jason's diet. So, you know, Jason said he did feel a big increase in energy from it. His libido went up a little bit, or stamina. He is super healthy as far as his diet goes. You know, whole foods, no processed foods, no. Let's just say he's a lot better than me at his diet, even though I'm not horrible at my diet. And I do work out 5 days a week or so, 4 or 5 days a week. But for me, it really did help quite a bit. Yeah, thank you so much, Omar. I appreciate that, man. Mamba, welcome in, man. It's good to see you as well. Awesome, Sudeep. Just started taking it. Sudeep, it really starts to give a cumulative effect, at least for me personally, in my own personal experience. About 2 weeks into taking Shilajit, I really started to notice a sustained increase in energy. And also my brain fog went away, like lessened a lot, and then everything just worked really good, you know, for me. It worked really well for me. Slept better at nighttime. But yes. Oh, Mark, thank you so much, dude. I hate super chats. Now let's take a look at Kite for your friend in the chat. Well, Mark, I appreciate you, man. Thank you so much. I get it. I get it with the super chat thing, but I appreciate you as always. And let me know, Grim Reaper Phoenix, is this the Kite that you're talking about? I believe this was the one. Kite US dollar. Did we look at it on Bybit last time? Or Binance maybe? Low carb carnivore diet. Yeah, I heard the carnivore diet works for some people and I heard it doesn't. So Mark, that was really nice of you, dude. That's stand-up thing. Thank you so much for that, Mark. All right, I'm trying to see from Phoenix if this is the right one. It's hard to count this listing pump as part of like the valid price action for it. You see, we pump and dump right away. So I actually like to look at like the lows on a lot of the coins like that. At the secondary low is where I kind of start it. I usually don't count the pump and dump of the launch. Now, if we were looking at an impulse from the lows, you could say you might be able to count a contracting diagonal in here. We can come look at that a little bit later, but you can count for sure a nice little 3-wave corrective move in here. So that'd be a motive wave and a 1 in a contracting diagonal. There's your 2. Obviously, all of this is a 3 here. 3's ending, and then you would be looking for a pullback. Now, in a pullback, in a wave 4, you generally want to come down between the 382 and the 0.5 Fibonacci, pulled from the lows of wave 3 to the highs of wave 3. And you're going to be looking between the 382 and the 0.5. We're on log scale, so we got to come in here and we got to set this based off log scale. All right, so we're passing the 0.5, and if we've hit in the 618, and we have, so we never mind about that. We can't classify this as an impulse right now. At least not this one. 1, 2, 3, 4, 5. Because we've hit in the 618 of your wave 4, invalidating that as a 4th wave. Now, then on the other hand, we could say this was a ABC, took out the pump highs, and now we are about to impulse down. 1, 2, 3, 4, 5. If you start with an impulse down, yes, you might see a 3-wave corrective move up to golden pocket, but then you would probably expect continuation down here. Money flow does support that we might see overall continuation down on this thing. It's just crossing into the red on the daily time frame. We had significant bear divs. Look at as we were making all these higher highs in here. Lower highs on the momentum waves. Your money flow finally topped out here. You did print a hidden bear div on NAMI on this lower high. Hidden bear div on the daily. And now, actually, we're even printing a hidden bear div from like last week or earlier this week. Hidden bear div there. Let's look at pulling our bearish pitchfork. And we're just going to look at if this is wave 3 down. Well, first off, we can actually... I don't even like that as a... If we're looking at this as a 1, 2, 3, if you're being honest with yourself, it's very hard to count 5-wave move in here. It looks like a 3-wave move. You could say 1, 2, 1, 2, 3 in here. You still don't really have, you can't say this is a 4 because it's going to come hit your golden pocket. And actually, I would have to pull it from here. Yeah, you hit the golden pocket, so you can't say that. All right, let's look at this as you are coming down right now between your 1-to-1 and your 1.236. So in a corrective move, that's your most common target. And we would have to look at this because this looks like a three-wave move in here. Maybe some sort of little three-way move in here. We could be looking at a WXY, and we're finishing the Y in a triangle in here. You are at your target zone between the 1-to-1 and the 1.236. And you can see the low right now, our current low is right on that 1.236 there. Now, if that's the scenario inside of this triangle that is going to develop, you would want to see it kind of finishing and then breaking up here because your WXY correction would be done. Man, volume on this thing is like nothing. It's getting pretty low overall. Wait, that's 25539. Okay, there we go. I mean, you are starting to break back into that pitchfork now. You got to be careful because your golden pocket, your very local golden pocket, is going to be right at the top of the pitchfork band. And that could be a little local rejection area. I'm not sure if you're looking even at this as spot. You could do something like this for a bit longer. Too many secrets. That's how I name my diary. It's supposed too many secrets. It's supposed to call tops and bottoms. It's an indicator on TradingView. Too many secrets. Oops. Let's check it on the daily. And let's go back to Bitcoin. Or does it not work on high time frames? All right. Well, it didn't work very well in this downtrend. That was an aggressive downtrend. So I guess in aggressive downtrends, sometimes it doesn't work in aggressive downtrends, but interesting that it's calling 78K a high. Tops on bear markets, like look at in trending markets. Let me see if this works on the 8-hour. All right, yeah. See, in super trending markets, it's calling tops a lot here, but it's wrong about half the time or more than a little bit more than half the time. Also, when we saw it on the 4-hour in this dump down here, it was calling bottoms. specifically in this area on the 4 hours, calling bottoms, and you would just dump down. So it looks like in a really aggressive trending market, it can call false tops and false bottoms. But especially in a bear market, like on the 4 hour, remember right here at 98, it had a top. Right now we're calling a top. Very interesting. And it did call the top on the all-time high too. Called the top here, and then we got that $14,000 dump. So Odyssey, have you back tested this quite a bit, or it looks interesting. I gotta say, it looks interesting. And I'm wondering if they're basing it off EMAs, moving averages. On the 5 minute, man, on the 5 minute, this thing's probably crazy, huh? Let's see. See how in a super trending like this is a pretty aggressive trend on the 5 minute. A lot of false tops in there. Let's try the 1 hour. In a very aggressive, a lot of false bottoms there. Man, on almost every time frame though, that 78K top is calling a top. And of course, Odyssey, I know you wouldn't be using only this. That could be an extra little nice step of confluence. I would probably be looking at it on more intermediate time frames, 4 hour, 8 hour time frames. For some reason, let me try the daily again. It was not working on the daily. What's going on here with it? It messed up my chart. Yeah. Oh, maybe it's looking real high time frame because we had some lines. Huh. Now on the 12 hour, it's not calling a top. That's the first time frame I've seen that 78K is not calling a top. Mark Dutch would be arrested for his secrets. Yes, he would, man. Mark Dutch has got to be a wealth of knowledge. I guarantee it. Sometimes you might have a point there. Yeah, just like any other indicator. Absolutely, Mark. I agree. Guys, always price action first, indicator second. I don't care what kind of indicator it is. I don't care. Market Cipher B, NAMI, whatever it is you use, price action first. So that is why it's important to understand the technical analysis aspect of it. Finding volume levels like naked daily points of control, range points of control, value area high, value area low. And then looking at, time frame horizontals, you can look at Fibonacci retracements, but to find order blocks in there, order blocks, breaker blocks, things like that, fair value gaps, you mark out your levels. And I use a few different things. Of course, I like pitchforks and channels. That's kind of my trend indicators that I use, my trend tools that I use. As far as horizontals go, the most important things we know in the market that move price action are liquidity 1 and volume levels 2. So I really like using the PVP, periodic volume profile, to find naked daily, naked weekly, and naked monthly points of controls. I also like to use the fixed range volume profile to find a range. And then you can find the value area high, value area low of a range. And then, of course, your range point of control. So once I mark out my volume levels, I'll mark out naked dailies, naked weeklies, naked monthlies. I'll find out where my value area high, value area low point of control is. Then I will also you see me a lot using pitchforks or channels. Like right now, we're at the top of a big descending channel trend, a daily downtrend trend channel, right? But locally, we've been in an uptrend since 60K, higher highs, higher lows, higher highs. So I will use on the short-term time frame, you can use like a pitchfork to find your bullish little trend in here, and I was actually using that first high down to that first higher low. and you're finding, your local trend levels. And this is for more like day trading and scalp trading, right? But I mark out all my levels, I mark out my fibs, and then I find confluence where there's multiple of those levels, volume levels, time frame horizontals, pitchfork levels, whatever, all of that together. I mark them out with boxes, and that's what I use everything on Coinbase. But that's why, like, you'll have a purple box up here. We've had this box on the chart for a month, at least a month before we hit into it. At the same time, at $66,000, we've had this box on the chart for a while. It was a golden pocket, a weekly, a value area low, liquidity grab of these lows in here. There was a lot more in there too. I think there was a naked daily point of control in there. So I mark out my levels of interest first, and then I use my indicators for confluence. As we're coming down here, do we see bull divs on the chart? And I remember as we were coming down here on the 4-hour time frame, nice bull divs, money flow curving to the upside. Nice bull divs, money flow curving to the upside. And then at the same time, as we're coming up to the highs, NAMI was showing bear divs. Market Cipher was not. But yeah, that's what I use. The indicators always second to price action. Yeah, market structure. I agree, Mark Dutch. Market structure is probably one of the most important things in trading, like ever, right? Because market structure is king, as I say, and as I've learned from some of my colleagues. Let me just hide this here. And I talked about it at the beginning of the stream. So far, we're still maintaining bullish market structure: low, higher, low, or excuse me, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low. So because we're maintaining bullish market structure, there is a nice probability we could continue the bullish market structure and put in a higher high. But there's always a point where the trend changes. It can't go straight up forever. It can't be making higher highs and higher lows forever. Not even the S&P 500, right? So there is a point where when you break market structure bearishly, you now have a greater probability of creating a lower high before now creating a lower low, and that changes your market structure to a bearish market structure. So market structure breaks are one of the most important things. And what happens in a market structure break, guys, is you often create those topping patterns, whether we want to call it Wyckoff distribution or a head and shoulders. Like, say you're doing higher high, higher low, higher high, higher low, higher high, higher low. Now you start to, higher high, higher low. Now you have your first break in market structure. By breaking down below this low, you have your first bearish break in market structure. Now because you broke market structure bearishly, you have a greater probability of making a lower high. And it's often between the golden pocket and the 786. You reject, and now you're going to make a lower low. What does that create? That creates that left shoulder, head, right shoulder, that topping reversal pattern. Or you could say tap 1, tap 2, tap 3, model 2, Wyckoff distribution. And the same, if you inversed it, it would be the same on the, on a downtrend that's reversing to an uptrend. You got that like inverse head and shoulders that's often created. But market structure is so important. And market structure, if you want to be a real conservative trader, market structure, even like scalp trading, wait for a 5-minute break in market structure. Then after you see a 5-minute break in market structure, long the pullback or short the, the bounce. And then you have a greater probability of those trades playing out. TRX is just going up. Let's see here. And guys, I do got to leave in about 8 minutes. USDT. I mean, it's pushing, yeah. I would say right away, I could see that last move down, it was a 3-wave corrective move. And then you broke market structure bullishly by taking out that high. So it is likely that you come up to take out this high. Just right away by looking at that. So I would say you're at least going to come up to 3366. I'm not sure if this is a fresh naked weekly, because I don't know when the last time I looked at this was. It actually looks like it could be a fresh naked weekly. Yeah. You still have a fresh naked weekly point of control just above you. And then you have a weekly level. Let me just make sure that's still fresh. Yeah, fresh weekly level. You have that weekly order block in there in between the naked weekly and the weekly. And the last time we looked at this, looks like it was quite a while ago, all the way back in January. But I've had this box on the chart since January. We're coming up into it. Golden pocket, you're... Okay, wait, let me get rid of that for now. Let's pull this volume profile all the way. Actually, I would look at this volume. I guess that is a good area. Yeah, you held value area low. Value area low, value area low, value area low. Now you're breaking up. Your POC is, you broke past your POC, you flipped it to support. Now you're continuing up to value area high. You're at value area high, and then just above you have a naked weekly and a weekly level. So I would say this is starting to get into a zone of big resistance in here. Also, if we look at kind of this upper range in this area here. Yeah, you have your range point of control there, and then your value area low. You're pretty much at that range point of control, and that's going to be where that naked weekly is. So I would say you are likely to come a little bit higher because the last move down we saw was a 3-wave corrective move. So I would expect us to at least come up to break 33.66, whatever this high was. 33.66, yep. And then probably hit into your naked weekly and maybe up to your weekly. So 33.74 to like 34.14. And you're at the bigger value area high. So be aware you're coming into some pretty significant resistance on this thing. I will say this, money flow looks pretty dang bullish right now. Look at that money flow. You are seeing some bear divs on the 8-hour chart, but 8-hour money flow on Market Cipher is really important to look at. And that looks really nice right now. Let's go to the daily. All right, you're coming into value area high of that bigger range. You are seeing bear divs, not quite confirmed yet, but they're, you know, likely to confirm soon. Money flow is finally starting to round out up here. So the next high you make, like into this box, you could see at least a significant pullback from here. Now, I'm not saying like all the way back down, but I'm saying you could see a decent pullback on this. Let me turn off that 200-day. Yeah, and you could even look at this as, oops. All right, I'll just delete that later. You got like a 1, 2, 3, 4, and you could be in that 5th and final wave here. Finishing an impulse. Now, after an impulsive structure finishes, you will always see a corrective structure. Sometimes that can be a flat up here, and then you can keep going. But a lot of times you will see that sharp zigzag correction, and that sharp zigzag correction usually comes down to golden pocket. So if we pull a golden pocket from the lows of the impulse to the highs, now I'm pulling it to the current highs, but we are expected to make another high. Remember that. We would want to put this on log scale. Yep. And let's just pull it up to that naked weekly. So 29 cents. It is also a pretty important support resistance flip. You can see in here. That's going to be a pretty important support resistance flip area. Resistance, you know, I guess this front ran it a little bit, but support, resistance, 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 support, resistance. So yeah, that is a pretty important support resistance flip area in there. Man, but TRX, honestly, it's doing pretty well for itself. I will say that you could still be in a triangle in here, a larger triangle in here that is forming on the daily time frame. And you'd be looking at, like, on the weekly time frame, that larger impulse, right? 1, 2, 3, triangle and a 4, and then you might get a 5 in here. Okay, I just want to check Bitcoin real quick. What is she doing? Wow, it is actually trying to roll over. I would be very cautious with this but we are seeing technically, we are seeing some bearish CVD divergences. You can see lower highs, higher highs here, but it is on a decrease in open interest. Another thing I will say is this is kind of looking on the 5-minute a little bit flaggy here. So is it going to break up and finally break market structure? And if we do break this flag up and break market structure, it would probably likely continue to sweep all this liquidity. Wander 5813, of course. Guys, please hit the like button for me if you got anything out of the live stream today. Thank you guys all so much for your kind words, for your support. Mark, thank you so much for the super chat and just for the awesome job doing a mod you do here, and for the humor you bring to the live stream, man. I appreciate that so much too. You know, I love reading your chats in other live streams too, because you always got something so awesome to say. Anyways, guys, I do got to get going. I will do a video tomorrow, and then Thursday and Friday, I'll be live at 3 p.m. Eastern Standard Time. Please come join me in the Telegram if you guys want to know what I'm thinking in between the live streams and the videos. Remember, you can always join the Telegram. It's free. All you got to do is join BYDFI using my affiliate link in the description and deposit the minimum deposit of $100 or more. Once you've done that, you click the Telegram link, and in the Telegram channel, you type in /verify and then your user ID on BYDFI, and that'll put you into the main Telegram channel. And once you're in, guys. That money that you're depositing on the exchange is your money. You're not giving it to me. You're not giving it to BYDFI. We're just having you deposit on the exchange in hopes you will try out the exchange, like the exchange, and start to use the exchange. So thank you guys for everything, and I will see you tomorrow.